All right, YouTube, Stocks by the Numbers, welcome back. Now, I wanted to do a quick update also here on Nike Incorporated, ticker symbol NKE, listed here on the New York Stock Exchange. Now, we did the video right here on the 29th as the company was posting earnings, was up here 113.5, just hanging out. Company was trading, I believe, about 3.5 times annual revenue at the time. However, as we see here, revenue came in with a pretty healthy beat there of almost $250 million. However, the margins have been decreasing, so Wall Street didn't like hearing that, and the stock immediately started to pull back. Now, I did mention the puts in the video. I also mentioned it in the Discord, and as we see here, just within a couple of days, we were at about 113, and we pulled all the way down to 103.67 before having a slight bounce. Obviously, the markets are up today. Interestingly enough, in my opinion, we should be red, but either which way, they kind of took Nike with it and kind of just rose it back up, basically to where it was yesterday, and now has since kind of rejected and been pulling back. And obviously, if these major indices turn red, it's obviously going to take everything with it, but more importantly, a company like Nike is going to really start chunking down back into the 103s and even further. Now, I know some people may have agreed with that, with my analysis. They may have disagreed with my analysis. However, I'm right, you're wrong. No, I'm just kidding. But, sometimes we're right, sometimes we're wrong. But, again, it was the margins that we saw that were going to negatively impact the value of Nike stock, which is why, again, this gap fill, technically, in my opinion, really should happen. 99.68, only a few points away from that. But also, more importantly, we just knew it was going to go down, and we knew it was going to continue to go lower. So even if you saw the video after the close, after they reported earnings, and then first thing in the morning you woke up, you bought puts, guess what? Congratulations, you made a couple of bucks. And if it was possibly because of me and my video, then, it makes me feel good. I appreciate that. Let me know in the comments section. But long story short, in my opinion, I do still think that we're supposed to have this gap fill. Again, we come down here. That would make the company trading, I believe, about 3 times annual revenue, and then from there it could potentially bounce back up into the hundreds. But again, in the short term, it technically should fill this gap and then kind of bounce from there back into like the low hundreds and just kind of bounce around, maybe getting back to above like that 110 level going into next quarter's earnings. But switching over here, even looking at stock charts, you can see on the daily, look, the MACD has just crossed. Obviously, the stock has been chunking downward, trying to take a break and bounce off these lows. But in my opinion, it's just going to continue to slowly start pulling back. The RSI still sitting north of 36.5 here on the daily. So haven't really yet hit that bottom. And as we see here, before this random June rally, you can see the RSI on this stock pulled back to about 20 at one point. So the 30 bottom, may not be the bottom, may not be the benchmark and the bounce that could potentially happen here with Nike. Now, of course, if that really dips down, then we're going to go even lower than that 99.68 mark. But in my opinion, I think they'll probably bring the RSI down to about 30, potentially sub 30, right when the stock breaks that 100 level, fills that gap, and then that'll be the bottom on not only the gap fill, but of course on the RSI, and then it'll bounce, and then it'll start to have that rally. Switching over here, as we can see on the weekly here, even going back before earnings, you can see the multiple rejections here on the 50-day moving average of roughly about 111.75. And now, obviously, the stock is down at 104.88. Now, it looks like it bounced here off the bottom, but it really didn't. The bottom Bollinger Band here at 102.87, the low was 103.67, which is why I'm saying, in my opinion, once all of these markets begin to turn red, as they were, they will most likely take Nike with them, and it will just kind of continue to slide. And I do feel that that slight sub 100 price target, I think, is very accurate and very feasible inside of, I don't know, maybe the next couple of days, maybe the next week or so. But either way, in my opinion, I think Nike will continue to go lower at least a couple of dollars. If you missed that big chunk down, again, it was at 113. Now it's down to 104, so it only has a couple of points. So if you don't want to risk it now, completely understandable. However, keep it on your watch list. And if you do see Nike approaching, $100 a share right around that gap fill, then obviously stay sharp, stay focused, and consider potentially catching that bounce and trying to time the calls off of that low of slightly below 100. But even here on the weekly, you can see the RSI just a touch below 40. And again, it came all the way down to 30 here on this big drop. And then, of course, bounced and had a big rally here. So we could potentially see the same thing happen. Again, we could bring it down to about 99. And then RSI will be probably around 30, 31. And then it could bounce off of not only that gap fill again, but, of course, the RSI benchmark of 30. Again, when the RSI, Relative Strength Index, RSI is at 30, that is viewed potentially as oversold, and now the stock is low enough, now it's time to buy. And on the flip side, when we hit the benchmark up at 70, that is usually what traders and investors look at and feel that the stock is now overbought and overvalued and should now begin to reverse and sell off and calm down a little bit. So we're kind of still in the middle of that range where anything could happen. You know, we could have a random pop back up to like 106, 107. It could hang out for a day or two before coming back down to 104, 103. Of course, we know this. Anything can happen. But overall, I got to put another feather in my cap because it was a pretty good call. And again, when you see these companies, it's not always worth it to play earnings, right? Because a lot of people would have looked at this and said, well, they beat on revenue. They should have went up, right? Isn't it all about revenue? And also at the same time, oh, it's Nike. It's a brand name company. So going into earnings, oh, yeah, Nike's probably going to beat, so I'll just buy some calls on Nike. You never know what is going to happen. And sometimes random truck going by. And sometimes numbers come out pretty healthy. And then we see the stock take like a 3, 5, 10% haircut. And we're like, what the hell is going on? And then it turns out on the conference call, the CEO said some dumb shit talking about, any potential obstacles they may deal with moving forward for the rest of 2023 or going into 2024. And then even though the company posted a good quarter, you're going to see, again, like a 6, 8% drop or something on that statement. So anything can happen. That's why, in my opinion, unless you are like 100% convinced that this company is just going to, beat earnings and up its forecast and increase its guidance and it's going up no matter what, then you can step in and you can do the earnings play and buy some calls. Or, of course, on the flip side, oh, this stock sucks. No one goes there anymore. They're definitely going to miss earnings, so I'm going to buy some puts going into earnings. You need to have almost 100% conviction if you're going into an earnings play. If you do not have that conviction, I strongly advise you to wait. Wait for the company to report earnings. Wait for Wall Street to react. And, yeah, were you in at 113.5 going into earnings with your puts? No, probably not. But then when you saw the stock drop a couple of points because margins went down, now you know, okay, the stock is at least going to drop, 5, 7, 10 points within the next week or so. So now that it's confirmed that the stock is heading downward, I can now step in and buy puts and be even more confident, right? Because we know it was a light report, slightly negative, and now we're going to be red for a little while. So it's going to be a slam dunk for you, right? But I'll end it there. So once again, stocks by the numbers. I want to thank you guys for stopping by. Like the video, thumbs up, helps out the algorithm, helps me get more eyes on the channel. Share the video, and more importantly, handshake agreement. Subscribe to the channel. I have no problem doing these updates or analyzing, doing a quick overall analysis of a random symbol that you guys throw at me. Or again, I have the Discord in the description of every video. If you guys want to come in, you want to potentially pick my brain, and we want to try to time some short-term trades together, I have no problem doing all of that for you guys. All I ask, help me help you. Push the subscribe button. That is our handshake agreement. If you're going to watch the content, or if you've already seen videos in the past, and I helped you with your pricing and timing, where you potentially did not overpay to enter in a stock, or of course, if we said that we really like something, you jumped in and you made money off of it, listen, that's fine. But do me a favor, push the subscribe button, handshake agreement. But moving forward, like I always say, I understand that markets are rocky and they're volatile and they're very uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. Thanks for stopping by. It's Friday. I hope everyone had a good week. Enjoy your weekend if I don't talk to you. Catch you in the next vid.